While the global economy has been struggling to keep up with the soaring prices, cryptocurrency prices have remained resilient. The U.S. Federal Reserve recently hiked interest rates to combat rising prices. The U.S. Federal Reserve raised its key lending rate by 0.5 percentage point, the highest rise in 20 years, triggering more investor worries about inflation and higher borrowing costs. Investors also remain concerned about the impact of the Ukraine war on the world economy. In response, cryptocurrency prices have risen, with cryptocurrencies like Bitcoin and Ethereum performing well. A recent survey of over 1,000 investors revealed that older people are increasingly committed to crypto assets. More than 2/3 of senior citizens have invested in crypto assets as part of their early retirement plans, compared to just 18% of the general population. While there are many risks associated with cryptocurrencies, the latest volatility should serve as a lesson to investors and traders. Bitcoin, the largest cryptocurrency, has lost more than $1 trillion in market value since November. This is the second largest drop in dollar value since 2008. Bespoke Investment Group, a crypto asset tracking firm, said a decline in Bitcoin's value could erase 2 years of financial gains. The crypto market is in chaos. Bitcoin hit an all-time high in November and has since been struggling to recover. Bitcoin's value has fallen by more than 50% since then. Meanwhile, Ethereum's ETH token has dropped by more than 45% since its April debut. As a result, many people are dumping riskier assets like tech stocks and shares in companies in growth phases. As the conflict in Ukraine escalates, major cryptocurrencies are also experiencing volatility. Bitcoin value fell to $36,370 Tuesday after reaching an all-time high of $4,125 a week earlier. Other traditional hedging assets include U.S. Treasury securities and gold. The fall in the crypto market this week has weighed on Bitcoin and Ethereum. While Bitcoin and Ethereum have seen volatile prices, there is some good news for these cryptocurrencies. On April 6, 2021, the Federal Reserve will begin implementing the Bullin update to the Ethereum network. This update is aimed at lowering transaction fees and gas costs for ETH. Another update to the network is Uniswap v3, a smart contract protocol that will further optimize Ethereum trading. With an increasing number of investors focusing on market dominance, Ethereum may be on the verge of even higher adoption in the coming year. According to ARK Invest's Cathie Wood, Ethereum's market cap could reach $20 trillion by 2030. According to Wood, Ethereum's use cases are likely to become exponential in the long term, taking market share from established financial intermediaries. The first cryptocurrency to emerge was Bitcoin, and this digital asset has since become one of the biggest in the world. But, as cryptocurrency prices have grown, the price of Ethereum has risen even higher. It is now the second largest cryptocurrency, and it has tripled in price since February. Ethereum is a decentralized digital currency, with its own network of 2.4 million computers. Anyone can set up a node, or computer, in the Ethereum network, and participate in validating the blockchain. Although Ethereum is a cryptocurrency, it is much more than that. It is a platform for smart contracts, and is rapidly becoming one-stop shop for contracts. Additionally, it is a good data storage option. By thinking of Ethereum as a full ecosystem, the currency has an immense potential for growth. Its price increased from $11 to $1,800 between April 2016 and June 2022, which is almost 16,300% growth. While the price of Bitcoin has seen massive gains over the past year, Ethereum has remained stable and has a growing demand. While Bitcoin has gained more than half of its market share this year, Ethereum has steadily grown since. The rapid adoption of Ethereum has helped Ethereum gain market share. This growth can indicate a rally in Ethereum. However, there are other factors that are causing Ethereum to gain traction. Since its launch in 2014, Ethereum has been steadily rising in price. Its price reached a new all-time high of $1,440 on January 19, surpassing its previous high of nearly $160 billion. After a brief correction, the bullish momentum had lasted about 5 months before regaining its strength. As a result, the crypto markets saw an increase in buying pressure and nearly all coins and tokens reached new highs. Despite the prevailing negative sentiment, the price of Ethereum continues to climb. A $10 bill can buy a cup of coffee in one day, a dinner in a restaurant the next, and a luxury car on the Ethereum blockchain in a week. This rapid growth is due to the technological innovation of tranche lending. The underlying technology of Ethereum, the blockchain technology, is the key to ETH's success. There are several factors that determine Ethereum's price, and a few of these have a larger impact than others. Bitcoin, which is the world's most valuable cryptocurrency, has a huge impact on the Ether market. If Bitcoin increases in price, so will Ether. However, Bitcoin's price doesn't necessarily mean that Ethereum will, too. The price of Bitcoin can go up or down, depending on the supply and demand of various cryptocurrencies. As with most cryptocurrencies, the price of Ethereum fluctuates with market demand. As a result, a bullish trend can be expected to emerge. As with any other speculative currency, there is always the possibility if price falls. While the price of Ethereum fluctuates, it's historically outperformed traditional assets. The price of Ether has been falling since sellers breached the $2,800 support level. Since then, buyers were unable to sustain a price higher than $2,000. Selling pressure increased in April, resulting in a sharp drop in price. In January, the price of Ether tripled, outpacing Bitcoin's sevenfold increase. Several new features and improvements were introduced in the past year, and the market capitalization of Ether has reached $250 billion, making it one of the largest cryptocurrencies by market cap. However, the price is still not high enough to justify the value of Ether, which is worth more than Starbucks and AstraZeneca. The ETH network is currently anticipating the future of scaling for the platform. After the Bull and hard fork, Ethereum token supply went toss, but demand soared. The price will eventually surpass $2,130, and analysts expect the ETH network to continue to outperform Bitcoin. Ultimately, the price of Ethereum will be impacted by a number of external and internal factors. While Ethereum has many supporters and opponents, it is also important to note that Bitcoin has a huge first-mover advantage and is the first crypto asset that most people will get into. Despite the competition in the crypto space, the cryptocurrency has the potential to be a significant player in price discovery. A popular blog for this purpose is Open Markets, which combines articles, videos, and news briefs by prominent leaders in business, finance, and technology. The website aims to foster debate and discussion on issues related to the digital currency. Ethereum was designed to be an open-source project and isn't owned by a single person. Anyone with an internet connection can operate a node and interact with the Ethereum network. Another key difference between Ethereum and Bitcoin is that Ethereum uses smart contracts, enabling a decentralized ecosystem of applications built on the blockchain. Stable coins, for example, are backed by a smart contract and pegged to the dollar, and other dApps are decentralized.